What's up, guys? It's your boy Ranji from the Broad Street Trades. I'm gonna do a quick video recap of the day trades, how they've been performing, um, go over a quick summary of how I record them, and also how I would trade them. All right, so let's just get right into it. So I had a few questions about the Friday's day trade, as it was. I basically was looking at Nasdaq short. I gave a longer outlook on what I thought was going to happen. Not necessarily a swing trade itself, but just that if it broke some certain levels, that the momentum probably would have kicked up, and that I would have played. I said in Discord I would have played next week's contracts, Mondays or next Wednesdays, for a possible swing. Like I said in the chat. I also gave a smaller scalp play here, as I said, if it breaks this key level here at this basically 13,880, that it was gonna probably fuel a bigger sell-off toward target and demand, which is, as you can see here, is what actually played out. I actually front ran this really hard. I got in. I seen this long-term downtrend here. Well, short-term, I guess, downtrend here, and come on, fix yourself. And once I seen this big wick here, then this was kind of good enough for me to be able to get in with my stop loss above the highs in the day. But people probably won't get in there. You could sit here and say, "Oh, why didn't you say do that in the day trade?" Because this is a low risk, high reward in one way, because I'm getting in kind of at the top with a target farther away. Yeah, you're absolutely right. That's probably like a 3-to-1 risk reward. You want to day trade like that, but it's more risk on hand, because then this could just be a false sell off, get trapping all the short sellers like me when I jumped in, and then squeeze to the other side to then tag supply. So that's why I did not alert it that way. I alerted that because in this, if it breaks below this would be more conviction that I was going to sell off. And as you can see here, it broke below, then try to squeeze back out, try to get squeeze out all the shorts for a fake breakout. It's created a lower high, and then it wanted to sell off from there. This is a prime example of how people get caught up and trapped in just not honoring their stop loss. So this is where you would have got in at when it broke below. And I'll display that in the contract here. So my courses are aligned, as you can see. So on the left side is the 337 Q puts. I try to play at the money, and then as you can see on the right, it's Nasdaq, so it's lined up here. So there's a 945 candle. There's a 945 candle. So let's say you would have got it as soon as it broke below that. I like to wait for closes, but let's say you got it broke below. So let's say you got it for like $1.60. We're just being real conservative here. Let's say you got it for $1.60. So even on that spike, you would have made 35%. But okay, fine, didn't hit target. You held. As long as you honored your stop loss, which my stop loss personally would have been possibly a close above the VWAP or close above 200. But you could have had a high day. That would have been risking a lot. But either way, honor your stop. But you shouldn't have been stopped out of this trade. So it pulls back. Now you're down 46%. Okay, that sucks. That sucks. You're down 46%. Now, notice how once it got to the VWAP, it rejected hard. It stopped out a lot. It stopped out a lot of shorts. And what happened was is that once it actually started to sell off, the volume kicked up down here and it pushed down lower. Okay, fine. That's a lesson for another day. But then if you would have held to your TP, you would have made your 37%. As you can see here, here's the trade. You would have gone for $1.60. You got out for approximately $2.20, which I think it hit a high of like $2.22 or $2.25 at target. Okay, fine. But the higher the contract itself was 93%. The low was 45% for a profit of 300. For a sizing of 300. Wait, why did I do that? Should be 3 of these. I made a mistake. So 3 contracts, 480 for a position sizing of $500. You'd have made a profit of $180. Okay, yet again. So you would have got in at $1.60. You would have held to your target, which was about here, and it hit a high of 91%, let's say. So at a high of $3. Okay. Now I had this trade as two winners because it executed twice. And what I mean by that is that when it got back above it, when price got back above it, the trade is still active. The trade is very much still active. Now, price a little bit lower, so, and it's towards the end of the day, so you probably would have played the 338 puts in the money towards the end of the day. It's like, you know, power hour. So price got above. Buyers tried to step in, couldn't push price higher. Once price got below here, you would have got in somewhere, let's say right here. Let's say $1.14. Be conservative here. You probably would have got it for like $1 for 110. Okay, price pushes back above, as you can see here. So now you're down 35%. And then target, it would have pushed the target again, which would have been this candle right here for about 107% profit. Wrong candle, excuse me. Right here. 205 for about 80% profit, with hitting a high of 164%, let's say $3 towards the end of the day. As you can see here, I personally didn't take this trade. I personally didn't take this one because I leave the desk about 11 o'clock. But as you can see, it's documented here for those who like to trade power hour or after 11 o'clock or viewer availability. Yet again, I calculate the timing. Is it before 11 o'clock? To me, that's very important to know when the best time your trades are happening, before 11 o'clock. As you can see here, we took about 5 contracts, 80% profit for a $455 win. And I'll just go over one more trade from this week. It's only 2 trades this week, but I'll go over one more because I had questions about this one too. So the plan was on Boeing. Where is Boeing? So I love Boeing for either side. It wasn't. It was kind of like a secondary trade after the SPY trade, but I loved it for either side. I posted levels up here where I wanted to short below. Gave you the levels where I wanted to go long above, and where I wanted to target on both sides. So Boeing does some fugazi shit. Sells off. I personally get in myself too. Once this candle had closed, I got in around here. I got in like the 197.50 puts or something like that. I got in like around, like as soon as it like closed, this candle closed and it started pushing low. And then as soon as it closed above here, like I got out, I think this candle right here. I didn't get out in this first candle. I gave it a second. You want to give it a second because what happens is that price tends to do something like this where it'll retest it, then retest it, and then it'll sell off for like a double top. So you don't want to just panic. But my stop loss was above that 199. I say in the Discord, let's try to find it. BA 199. I say might go long on BA above 199 for a swing. So my stop loss 199, and then if it got above 199, then I was interested in going into either a swing trade or a day trade. But I was eyeing a swing because I didn't know how much strength it was going to have to run to target. But I wanted to get in this early because as it was trying to sell off and buyers, as you can see with these wicks, kept stepping in, it made my conviction to the downside less and my conviction to the upside more. So as soon as price got back above 199, I personally got in. But if you would have got in at this 204 level, now let's get the Boeing contracts up. So let's say you would have played the 205 calls. I could just grab any one of them. This is, if anybody know how to do this, check options. This is how you do it. So you would delete all that, 205 call, and then you would put in the date here. And what day is this? A Monday. Okay, so I think I put in the sheet as a 207.50 call, but this is fine. This was just fine too, just for visual purposes. Okay, so it closes above on this candle right here. So you would have got in at 402 and target. Sorry, this thing bothering me right now. 420, excuse me. You would have gotten 420, and then you would have got out. You probably wouldn't have caught the high, but 609 would have been the high for 44%. But let's just be conservative and say you got out for 580. Let's just say 580 for like 38%. Yet again, another solid trade. This is how I calculate them. I documented as the 207.50 calls. I believe I had the 200 calls for next week. That's what I had personally when I got above 199. So 207.50s, high contract 51%. You would have got out for like 49%. Wasn't a 0 day, blah blah blah. And you would have took the loss on the first Boeing trade, $65, but you would have took the dub on the next one for $180. Now we go over the sheet real fast. You can see, so it was only 2 trades this week, which is you definitely don't need to trade every day. So if you'd have started with 10K, you'd be at 54%. Green weeks every week. Weekly, every day is green, as you can see here, red days, but green weeks, green months is very important. And I started tracking these, I believe, January 28th. So from January 28th to March 6th, which is basically only like 6 weeks. In 6 weeks, you'd have made 5K. I don't know if you make 5K at your job in 6 weeks, but here you go. All $500 sizing with an 80% win rate. 21 wins, 5 losses. Here's the days. It seems like I don't lose on a Thursday, which is hilarious because I remember Thursday being my worst day, like 4 or 5 months ago, if I'm not mistaken. Thursday was my worst day, and now it seems to be the best day. Maybe because I'm being more selective here, but here are the trades. I don't put anything fugazi here. I don't even put trades that I actually take sometimes here. So for instance, I play NIO, and I'll show you the chart real fast on that. Like I personally traded NIO twice this week, and one of them I posted in the chat about how I wanted to take it long. As you can see here, I had calls above 2150. But I didn't put in the free day trade channel, so I'm not going to count it as a trade. But I posted in the chat on how I wanted calls if it got above this. So first 5 minutes, I don't trade in the first 5 minutes. I didn't take it, but then when it pulled back below, I said okay to myself. I'm like, okay, if it gets back above, and sure enough, when it closed above, I think I got it on like this third candle right here, this green candle. I think I literally bought it almost at the high, and then played it to my TPs, as you can see here. Then I played it again several days later when it got below. So when I said to myself, if it gets below here, I'm going to get in short, targeting this level I had short below. But even if you would have took the short below here, you would have had a nice day trade for a scalp here too. And if you was NIO is good for equity too, so you'd have made 2.27% on that. But I say that to say that I don't even post all the trades that I take. The trades, I do post them in the Discord when I say I like something or I want to take something. But if it don't go in the free day channel chat, I do not post it. So those to me are the most high of quality trades. They're the best trades that I see out there. And if I don't see something, then I won't post something. So it was 2 trades all week. I think one day I didn't even trade because I just was too tired. And the other days I didn't see nothing that I really liked. Even though I traded NIO, I didn't post it as a trade because I didn't think it was that great of a setup as the market was pulling back hard. But I was trying to look to go long. So yet again, you started with 10K 6 weeks ago. You'd be up 54%. Here's all the stats. The win rate, the average win percentage. So I actually think it was like 67% like last week. I think the last few scalps, but the average loss percentage, this is what you want to do. So if you're doing quick easy math right here, it's almost 3 to 1. We're winning three times as much as we're losing. That'll be it. You want trades like that? Join the Discord in the description down below. Till next time, guys. Take it easy.